Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Tuesday, the 16th of February, 2016, and ending Friday, the 19th, starting on a Tuesday because Monday is the President's Day holiday. Banks, markets, everything are closed for that. So we will focus on just the 4 days of the short week ahead. Here's a look at the ES front-month futures contract. This is the S&P 500 in futures format. This is the correct technical way to view the market as a professional trader. Charts, as usual, brought to you by eSignal 12. So we bounced a little bit, gapped up and went on Friday. It's been sort of a mixed week. It'll be easier to see when we look at the intraday action. But at any rate, we were back up a little bit on Friday. So we did hold the lows. This is important. We've still not closed below that low back in August. We came very close to it on Thursday, but then bounced back. So crude oil back up $2.90, but that only takes us to $29.10. Amazing. I don't know that anybody would have ever said, oh, crude oil up almost $3 and you're still in the 20s. But that's what happened. Gold contract was up again. Actually, it was down $7.60 day up for the week. S&P cash index gained 35.7 on Friday, but again, you'll see a lot of it was the gap. We'll show you that in a minute. NDX, NASDAQ 100 up basically 57 points. And you can see 4 days this week spent kind of in the same area. Monday started out a little higher and sold off. It was a very eventful week, actually, in trading. Here's the SOX index up 12.72. That brings us back above those, safely above those August lows for now there. Biotech's, on the other hand, up 73.51, but very near the lows, and we're already below the August lows. VIX gave back 2.74 points. The trend, because of the light volume on Friday, only 1.65 billion shares, actually 1.8 with the prints at the close, ends up at 0.6 for the close. That brings the 10-day moving average still at 1.08. NASDAQ volume, as I said, about 1.8 billion shares when all is said and done. After Friday, it had been looking like about 1.65, but you always get a lot of closing volume, so that showed up. The advanced decline ratio, plus 1629 on the NASDAQ. That's pretty positive. One of the better days in a long time for market breadth. Plus 1835 on the New York. That's the best day of the month so far. Google gains a measly 53 cents. You still have to look at that. Look at that 13 signal on Google. A couple things to consider on this Google chart. At the end of the year, 2 days left. We talked about Google staying up until the end of the year because nobody wanted to sell, lock in the tax gains. Then we get a 13 seeker sell signal with 2 days left. We rally up. We exactly hit the pink risk line of that. That's the high. We sell off in January. We come back up a bit in February. On the earnings, the stock was actually trading higher than you'll see on this chart after market. But yet, by the time we opened that day, where did we open? We opened right at the pink risk line. Isn't that absolutely amazing at $800? Tried to trade above it, ended up closing below it. So that risk line is still the wall if Google ever does head back up. And now we're back to the lows of the year. That is some amazing technical action. Not amazing technical action. That would be Apple up 29 cents and really not very exciting anymore. Amazon gained $3.26. You'll notice this one had the 13 sell signal also around the end of the year and has really already made that move. Netflix gained a buck. All right, let's take a look at the intraday action here on the ES. Actually, let's go to the intra-week action. So we'll go to 10-minute candles so we can see the whole week. So Monday we gapped down and headed lower, rallied back late and closed right about where we opened. Tuesday we gapped down, filled the gap quickly, and moved around a little bit during the day, closed right about just above where we opened, right about where we had closed the prior day. Wednesday we gap up, we push higher. Most of the day is not too eventful. We eventually sell off and fill the gap. Thursday gap down, pushed up a little bit, sold off some more, and almost looks exactly like Monday, doesn't it? I mean, it's really creepy how much Monday and even Tuesday look alike intraday, and then rallied just enough to close just above where we opened, but we did not fill the gap. And then Friday we gap up and pull back a bit. We do not fill the new gap. We head up a little bit higher. That fills the gap from Thursday in the process. Here's the NQs. Even less interesting here. This is pretty boring if you look at it. Not really much in the way of gaps left behind. We filled the gap down Monday. That was the big gap, right? That filled on Wednesday. All the other gaps are filled except for, we didn't quite, no, we did fill the gap. We did fill today's gap on the NQs. So all the gaps from the week are filled on the NASDAQ side. All right, so what's up with the short week ahead? What do we have to look forward to? Let's take a look at the data that's coming out. Starting with on Tuesday, Empire Manufacturing, an hour before the bell, 10 a.m., we've got the housing market index. At the close, we've got the net long-term tick flows, no big deal. Wednesday, the MBA mortgage index, PPI, housing starts, building permits, capacity utilization, industrial production. That's all before the bell. It says crude oil inventories, but that's wrong. Whenever you have a Monday holiday, that comes out on Thursday. FOMC minutes from the last Fed meeting are right there. And then on Thursday, we've got the initial claims and continuing claims in the Philly Fed. Then you'll have in the crude oil numbers, then you'll have natty gas. Natty gas will get moved to 11. And finally on Friday, just Friday alone, you got the CPI at 8:30 a.m., an hour before the bell. Obviously, that's a big number. The other thing to remember going on this week, and this is obviously something that comes up every 4 or 5 weeks, is this is options expiration for the month of February. It's not a triple expiration. It's purely stocks. You've got a short week. As you know, that usually means that you'll get the options unraveling move if there's going to be one, if there's a lot of open positions in options in one direction of the market. The unravel of that move as they close those out will occur usually on Wednesday, sometimes Thursday, and then, of course, Friday is usually dead. So Friday morning, we're going to have that big CPI number, maybe some early action, and, maybe not as dead as this Friday was because everybody left going into the long weekend, but, Fridays are typically slower, and expiration Fridays are usually the worst. Now, one thing I would caution against, if the market does start selling off this week for whatever reason, the days where the market is selling off hard around options expiration get a little bit concerning because there's less protection on the market at that point in time. So just be aware of that. If we do sell off, it's a good time for them to freak everybody out, and they tend to do it. I would think Tuesday's a little light to start because it's been a long weekend. I know there's some weather issues back east, mostly about it being ridiculously, unbelievably, never before heard of cold. Somebody said something about -50 below zero somewhere in the world. Here in the U.S., that's unbelievable. So Monday might be a little late. I bet Tuesday and then Wednesday. I'm sorry, Tuesday might be a little late. I bet Wednesday and Thursday are the better trading days of the week. One of them we hope to get the options unraveling move that helps us out trading, and then Friday should be a little late after the CPI, maybe the first hour. That's the short week ahead. We'll be in the lab helping you make money. If you've not yet taken a trial of our services, feel free to do so. It does help us out. And if you do, we'd like to help you out. And if you do find these videos useful, please like them on YouTube. That does help us out. Have a great long weekend.